Good morning, everyone. Wakey, wakey, rise and shine. Grab your coffees. This is another episode of the London session on TopstepTV. My name is Deeyana Angelo, aka Marcus Talker D. If you're here for the first time, I've been trading for 18 years. 13 years out of that, I've been trading futures, specializing in more alternative products such as RBOB, crude oil, gold, and the likes. Now, today, actually last night, I started having some issues with NYMEX products specifically on my live. So I'm going to have to stay on the practice account until that gets resolved. Because for some strange reason, I would open a trade, it would get closed. I would open a trade, it would get closed. So it was a little bit weird. So I reached out to the risk team, and they are trying to see why my NYMEX products are not really working properly. So yeah, so we're going to stay on the practice account for that reason. A little bit annoying, but it is what it is. I may have to kill a few things here. Just give me a second. All right. Hopefully we are coming through nice and smooth. For some reason my mouse is a little bit jittery today. Jittery mice. We do not want that. But there's a lot of dog hair here. All right, so what are we seeing? Like Z said yesterday, I pretty much picked the bottom of the gold rally. It was nothing but the outer value edge. So we had a mean reversion down to value reversal, and that was pretty much the low that stayed for most of the day. I am looking at RBOB and crude oil today rather than gold, because I don't really like buying tops whenever I can help it. And at the all-time highs, I kind of feel that the only reference you really have there is the options activity. So right now in gold, we have 2,900 as a potential kind of stopping point, or at least a level of interest for further upside. But, until that sort of gets resolved, I am going to wait. What do we have on RBOB? So we have a potential for mean reversion back down to value, similar to what we saw in gold yesterday, but with one slight distinction. So we do have some put levels right around 70, 90. This is something I convert from crude oil. So it's, let me do the full screen here. Okay. So I want to wait and see what they do here. Even though we have single prints, we kind of ran into that very big level that could be slightly problematic. So we don't want to get caught. We want to make sure that we are making good trading decisions. Another slight caveat here is that crude oil actually has its own value high at 72 evens. So again, we don't have that much space there. But, RBOB, when it falls, it really falls. It tends to be a little bit quicker than, quite a bit quicker, almost double the amount actually. One good thing about crude oil is that the OVX has started to have a few days where we hang above 35. That means we can maybe look at crude oil at some point, but I'm going to give it until March before I even like pop my toe in there. And then if we fall below that cutoff point of OVX at 35, I'm going to just use it for reference like I have done in the last few months. Couple of hypos. One hypo is that we continue to fall towards value high. Second hypo is that crude oil is going to hit its own value at 72. And then we're going to see some reversals. So for now, this is not a great setup for me. I would like to see some sort of a resolution either side or a pullback of some sort. But apart from this put support level, that is putting a wrench in the works for what I see happening on the profile, I want to be patient as always, right? So we want to create hypos, have the plan, follow the plan, and then snipe setups from lower time frames if the setup calls for that. Now, if you plan to hold your trades for like 3, 4, or 5 hours, you don't need to snipe anything. You can just look at the 30-minute chart and base your decisions on those on that particular time frame. Use a slightly larger stop loss that would correspond to the volatility of that product. Ideally, you don't want your stops cutting through candles if you're doing that. And generally, cutting through candles is not really that great of a stop loss placement. So, you know, if you were to maybe do, let's say you do a long and then your stop is sort of like this, because you're trying to minimize the loss or something. This looks terrible. Why? Because it's breaking the structure, right? So if you want to be safe from the liquidity grabs, your stops should really go quite a few ticks below the low where you're seeing something changing. So let's say that if I drop down to a 2-minute chart and we create a bit of a pullback here, I see a lot of people entering positions kind of like this, right? And then they're going, oh, my stops got taken out. Yeah, I wonder why, because it's like it's breaking structure, right? So anytime you can do a reversal trade, or you want to do a reversal trade, don't put your stops through the candles. And then if you can't get a decent enough stop loss size that will be okay for intraday, just don't take the trade. It's not a good opportunity. You know, it's a very simple way to figure out whether the stop would be too large. Sometimes we have things going crazy and one candle pretty much takes out the third of the average session range. So what does that mean? Well, usually I aim for the third of the session range to be my target. I'm not gonna get involved if we have such a big move in one single time period. That's just like, what are we doing? So just some critical thinking before you actually click that button would go a long way to make you be more selective. And I know many people are not selective, because when I hear folk going, oh, I did 40 trades today. Really? So you had 40 star setups today. Now, I can see it if you trade multiple products and you are looking for shorter opportunities. That's fine. But we're talking about people who are trading one product. It's like, what are you doing? Trying to catch every tick? Is that the game here? Because that's not the game. That is one way to lose a bunch of money when things don't go to plan. So slow down, size down. The more you trade, the lower the position size should be, because you need to fit all of those little trades, millions of trades that you're doing, into your personal daily loss limit that should be managed according to whatever balance you have in the account. Now, whether that's the maximum loss limit at the start of the combines, or maybe further down the line when you have an XFA, or maybe after you've had your account for a while, you know, relying on the core default daily loss limit that you may negotiate with your risk managers. That's one thing. That's sort of for their protection. But, you know, once you're working with the risk team, you can actually move that around a bit, and there are ways to figure out what your personal daily loss limit should be. And this is probably going to be different for everyone, right? But ballpark, whenever you're starting a new combine or a new XFA, just don't use more than like 1/10 of the assigned maximum loss limit for all of your trading that you do. So I'm not talking about per trade basis, I'm talking per day. And then some people might do just one trade per day. Well, in that case, you can trade a bit larger, right? Quite the opposite to what we see. We see scalpers who are doing 40 trades a day, trading like 5 and 10 lot positions. And then we see people who are, you know, holding big positions, trading small. In my eyes, that should be flipped around, because, you know, if you're only taking one trade a day or 2 trades a day, then you can afford to take, you know, one mini for example, in RBOB, and use most of your loss limit on that trade. But the more you trade, you have to fit it in. So is it a wondrous thing that people blow up when they're scalpers and they blow up on in their XFAs? I don't think so. I think that's actually the expected outcome when you're doing that. Right, so we are getting a little bit of buying here, just a little bit, like nothing too much. Why is my, like, I don't know why my computer, let me just do something here, because I'm getting a bit of a lag and I'm not liking that. Let's just maybe okay, so I'm not choppy, I don't think. Okay, we're hanging. My computer's decided to hang. Okay, that's a bit better. And now let's re-enter that. Sorry guys, my computer is like chopping around for some reason. I probably have too many things open here. I do need a new computer, which I'm going to tackle when we move, but if we move, hopefully. So yeah, let's have a look at a couple of questions here while we wait for some of these events to happen. And MGI, market generated information. How did you overcome the psychology of feeling like 1 minute isn't enough? Can never stick to just micros and my losses overweigh my wins. I'm not sure that I'm over that, man, because I have some larger accounts where, you know, we have positions of like 5, 10, 20, 40, and in the heyday, 80 lots, you know. I think for me these days, having different accounts kind of helps that side. So I'm not focused in on any one account and going, oh my God, I have to do this. It's kind of one of those things, well, you know, I don't really need this extra account, but I want it, right? And that sort of tends to change how you think about your account while still having the desire to do something with it. I would say the first step to ungluing yourself, just like kind of thinking back in the day, how did I deal with like the scaling up? Because a lot of people don't survive the scale up in prop. You know, you get an increase in limits and suddenly you mess it up and you're in a you've dug a big hole for yourself, right? It's a very, very common problem. And one thing that I did do, like you will notice every time, okay, since it's a practice account, I can show you this. Every time I open a position, you will notice that I have ticks, right? So I don't have monetary values. I literally just have ticks on here. And that means that every trade that I do looks the same. You also need to maybe put your ego aside, you know, to not go, oh, I'm a trader, I need to trade large. No, you're a trader, you need to manage risk. That's your primary job. Why is this? Oh yeah, it's very gappy. Okay, so I think today we're going to be waiting for that crude oil inventory. I think it's today. Let me just double check because sometimes they move it, but usually it's on a Wednesday. Yeah, so crude oil inventory is today at 3:30 p.m. my time. That is 9:30 a.m. Central. 9:30 a.m. Central. Yeah. Okay. So, with today's RBOB, I mean, it's very gappy, right? So this is why we're getting a big spread. You can see, and we're going to be starting the rollover at some point. In fact, I'd be surprised if it hasn't started already because we now have about 10, 12 days before it rolls into the new contract. This happens every month in crude oil. It's a little annoying, but, you know, there are ways around it. You can always look for more range-bound moves, or you can just go and do something else while that happens. All right, so put support seems to be breaking down. Just gonna ballpark, just try doing this. So using kind of a lower time frame structure to see if we can get a little bit of move back down towards that value high. Yeah, that spread is quite something, isn't it? Oh well, it is what it is. Yeah, so the inventories report is pretty much the only thing that will markedly affect crude oil, natural gas, and RBOB when it comes to like big releases. And yeah, things like interest rate and all of that has some effect, but the energy products are one of those things. Wow, those. Yeah, I do not like these. The spread is like just like horrendous. So I'm gonna sit and wait here because there's not enough liquidity here. I mean, look at that. It's not this thin normally. This is dangerous, guys, because you can get these like slippages. And there's not much you can do because there's nobody here. Usually you will get, a little gap, then you have a little block of orders, and then another little gap. Like just as well I'm not on my live today because I do not like that at all. But now that we've had a little bit of buying happening, let's see if it fails the auction, right? So this is how you would figure out your hypos. Put support, some buyers step in. At one point it looked like they're falling, then they jump and teleport, and now you're looking at the second hypo. So yeah, the spread is the spread is actually 7 ticks wide. That's a lot. Crude oil is still only 1, but yeah, that's quite a lot. So yeah, first step to overcoming your any kind of positioning problems and stuff is just put everything in ticks. Now you see me constantly not showing the P&L and realized P&L. That's why, because these are smaller accounts. I want to be somebody who is showing you that you're trading a certain size for the appropriate size of the account. I know we have some people who are racking it up and stuff, but they're not. Like it's kind of like winning the lottery. That would be like the equivalent. If you think you're gonna be the new Dakota tomorrow, Dakota is a very special guy. Like he's he has a lot of risk appetite. He can handle a lot of risk appetite on a smaller account, and it works for him because of his experience. He's been trading 15 years, right? We've had him on here for London. He spoke about how he started messing around with the markets when he was 9 years old. So unless you're that kind of an individual and you've done impossible things in your life, maybe, going, trading like 3 and 5 minis on an NQ and combines, that's not the best choice for you, especially if you don't have more than about 2 years experience. Because what does that mean? It means that you're not experienced. You don't really know how to properly manage risk. You don't know when to stop. You're overcome by emotions. You don't even probably know what your setups look like yet properly. Like you might have an idea, but how much confidence do you have? Now, Dakota doesn't have any of all those problems. He's got high confidence in his setups. He's done things a million times, and he's got a big risk appetite. Now, I'm different. I can't trade, a 3 lot on a combine where I have 4.5 grand available. I just can't, like not at 44 years of age and not at, at the point where I've traded large accounts and I know the longevity for me comes from, just being quite diligent, having the high risk reward, not doing 100 trades per day. Granted, I have some days where I do 10 to 20 if it's like a particularly scalpy day, but on most days you will see me make like 2 to 3 trades. Like that's pretty much it. Now I like to rely on higher risk reward because a lot of the times it's less stressful, so I will be very selective with the types of trades that I'm taking. We saw that in gold yesterday. Pretty much at the bottom, there was that long that I did, and it was the low of the entire day, right? So that's what I mean when I say be selective. Know the points where the market could turn around and give you a massive trade. They're not going to come all the time. They might not even come every day. Like, for example, looking at DAX now, it's sort of hanging around the value low, but it's consolidating. Like, to me, this is not any sort of a setup. Like if I do anything with it, it will be scalps from the bottom and the top of that range until that breaks, and then we're done. Until such time, VWAP bears no relevance on a day where things are looking like this on DAX. But some people will be like, well, you've got a value acceptance, go long. It's an equity index. I don't want to go long with its price action. Look at that. So maybe I'll go long if we smash through 21,480 and then we reverse. And then that will be like a tiny scalp for maybe about 20 ticks. And then if I can get the same from the Asia, it's not Asia, it's actually Eurex high. So from 21,550, so if we smash that, reverse, yeah, there's another trade there. But, just looking at it right now, this is not a big opportunity for anything. So therefore, no move. Now, crude oil might be an opportunity, but I'm going to position myself in RBOB instead. So what do we have? Yeah, that put support looks like it's doing things, but that spread is just terrible. So I want to wait for a very good opportunity to come in, even on the long. Usually you will see me miss the first move. Sometimes I will front run it if it's like a very obvious time of the day, like the end rally or fade into settlement for NYMEX. But any other time of the day, I will try not to front run trades. I will try to let it appear, then a pullback, and then I go in. If I don't get a pullback, there's no entry, right? So we don't want to be imagining things and playing fortune teller, because that's not what this is all about. We should be reading price action and not playing psychic, okay? We are not predicting anything. We have an assumption of what should happen based on MGI, and then you look for the microstructure changes and opportunities on low time frames to get in on that move. And then, hopefully you have enough volume to take it where it needs to be. We are getting a bit of the DMI color change here, so that's good. But we still need a couple of things. We still need the 30-minute chart to definitely close inside the this red box. That's the initial balance. And we need a little pullback. That spread is still growing. It's like now 9. So that means if I enter a trade, it's going to cost me, so just for reference, when you have a spread of 9, just to enter a trade is going to cost me $38. Great. Yeah, I would like that to come back down to some normality. And look, RB is always going to have a bit of a spread, but 8 and 9, that's a very very dangerous market. So yeah. Okay, let's have a look at more questions. Hi, Deeyana, do you have a resistance on gold to the upside? The only reference that I have upside, there's no resistance, these are all-time highs, is the options activity calls, but that doesn't mean much. Like you can have call buying at that level at the strike, and that's at 2,900. So that's the only reference. I mean, I have some of my statistical measures, but on a day when it's shooting up, you don't expect statistical norms to be followed. You actually expect them to be broken. But yeah, I mean, if we can get to 2,900 and then we confidently reverse, maybe there's a scalp. I wouldn't hold a trade until the cows come home, because that's dangerous, because it's against the trend. Anytime you're counter trend and you're trying to hold trades in a blindingly obvious uptrend, that's an aggressive stance. Like, have you ever thought about that? The length of time that you hold your trades is a reflection of how aggressive you are. So if you're in a long on gold and you've sniped it from similar area where I sniped it yesterday, and then you held it, that's conservative, because you're going with the direction of the trend after a good pullback. But sniping it at the all-time high for a short and then trying to hold for 3 hours, We don't want to be doing that, right? Until we have some sort of an idea that we're distributing, that we are maybe bracketing, spend a few days of overlapping values, and then we start to roll. That, that's a different thing. That's a market state change. But just if you're going to short gold, I'm not saying don't, because obviously we're intraday traders. I wouldn't. Let me just put that out there. But if you are going to short it, just don't hold it, for 3 hours. Get your moves and get out. Sushim says, hi Dee, can you recommend some important data, e.g. POC or volume, or some data that are important when we approach the market on daily and monthly basis? That would be different for everyone. Like for me, I have my own data points that I've tested to death. Outer edge of value is one, session specific, obviously, so only RTH hours for the session you're trading. I then change that when the next session comes in. So for example, if I'm trading gold, and I happen to have a position, I will actually cut it off at COMEX open. It used to be at like 1:20 p.m. my time, but now it's kind of 1:30 p.m., so 10 minutes after, primarily because back in the day, you didn't have platforms that could start the candles on 20 minutes. It only started it on like top of the hour, bottom of the hour, right? And then everybody sort of started taking 1:30 p.m. over here in GMT time zone as the COMEX start time. So, and it really doesn't make that much difference because I tried moving it to 10 minutes prior. And it's like, maybe a couple ticks difference. But so PSC for me is not much on the volume side as well. It's not much of a any target unless I'm doing like a swing or something. And then if I am doing a swing away from volume POC from a 4-week's worth data, I might use that as a target wherever the target is. Like, let's say the algorithm tells me, oh, it's going to be up here. And I'm going to be, well, no, actually, we're going to take it at POC. Why? Because it's the widest point of the profile. Whether it's volume or market profile, it's still the same. It represents the widest point of the profile. So going against that is a little bit silly. All right, let's try another long here in RBOB. Requires a slightly bigger stop loss. So let's go with our core one at 75, also because of the horrendous spread that we have. And then, I mean, let's do an aggressive target all the way to the other side of initial balance, but I may take that off. Now, obviously, I have my own methodology when it comes to data points. Initial balance is something that you only get after an hour. And yes, I do use that as an important price point, but I can't tell you it ahead of time because I don't know what it's going to be. Again, not playing psychic and, crystal balls, but just going, okay, let's see where they're going to take the initial balance. Where is it going to be? So most of my plans that when I do a plan intraday, will be done after that initial balance. I mean, already towards the end, you can sort of see how it's happening. But generally, like for me, I can write my plan in about like 2 minutes flat. I know that some newer people, you probably will spend quite a long time making a plan, scratching your head, getting confused, paralysis analysis, and all of that. But my method, the way I do things is pretty systematic. We go from top down. Once we zoom in to the profile, we go from initial balance, extensions, are there any single prints, where's our VWAP, where are the supplies and demands, and then we kind of put all of that into a neat little bow, and you have situational awareness. To me, it's kind of like a different instruments in a symphony, where you're effectively trying to get everybody to play the same tune, and you need to find your sort of space inside it. was that whole debacle with with Ariana Grande and holding space. Did you guys see that? That was so funny. Cynthia Erivo and Ariana Grande were doing like a Wicked interview, and the interviewer said something like, "Oh, many people are taking the lyrics of Defying Gravity and really holding space with that," and neither Cynthia nor Ariana knew what that meant. So they're all like, "Oh, yeah, really? Great." And the whole interview was like very uncomfortable. So yeah. So don't hold, like, you have to hold space. You have to hold space with your position. Don't marry it, but, be aware of whether the other people are also holding space with the same direction of your trade. So whenever I'm looking at whether a setup is valid or not, like even if I'm taking a pound, like obviously it's a practice account, so I can be a little bit more sort of gung-ho with it, right? However, in my live account, like you've seen me, I'm very diligent with my entries and stuff. And it is a different way of trading. One day you're clicking buttons and the other day you pass your combine in 2 days. Now you're in an XFA. It's like, oh God, now what? So you try doing the same thing and it doesn't work because situational awareness goes, or it hasn't been that great to begin with. So, So this would be the point where I could maybe scale in, right? This is how I like to scale in. I like to average into positions, and then if I'm going to average into a third lot of my positions, it will be if this turns around in my favor, and then I will typically move a partial stop somewhere in the middle just to kind of protect that downside because we already have some move in case something unexpected happens, and then you kind of just let it run, right? That is the idea. When I'm in with more than one, I will have a couple of price points where I will exit. So it depends on the trade. If it's just a scalp, then I just take it. And scalps are the point where I would put things to break even, right? Because you just don't have time. You're like, okay, we're looking for a quick move. If this smacks back down, you just don't want to, lose extra cash. It depends on the type of the setup. But for me, for now, for example, to go back to those orientation points, the initial bounce low remains the orientation point on both crude oil and RBOB. Now, if I compare the two charts side by side, I would say that actually RBOB is a little bit stronger. So here they are. This is a bigger product, right? So it has more violent movement. But the value, let me see if I can kind of match them up. So here is how RBOB looks. And, it is more whippy. So it wicked down, trying to turn around. What is crude oil doing? It is very orderly consolidating right now above the value high. So for the 2 hours that we've been open for London, we haven't managed to close that gap. That can be a sign of strength. We also have the session high from yesterday. But overall, I think that RBOB is actually stronger because this one is a red candle on a 30-minute chart. This one is already trying to turn green. So to me, RBOB is actually just eyeballing it. I think RBOB might be the stronger of the two today. And that will always happen, leaders and laggers. So then if we can pop higher and we actually manage to close any single 30-minute time frame inside the initial balance, that opens up the possibility for full rotation through initial balance. Without that, it's just like guessing, right? So we still need that. Right now, staying objective, we didn't manage to close the 30-minute chart inside the initial balance. So technically, on both of these, further downside is good. But I have a time-based limit for the gap fill. If we didn't close the gap in the first 2 hours, what does that tell you? Then all that volume in the open, and it can't even reach that. So it's either that the players that, have the deep pockets to move this thing are not there yet, or that the interest in shorts has waned. Imagine if you were actually in the pits and we get down to these levels. And then you see, you know, crude oil doing what it's doing. So let's put it up on here. It's doing that. So it's like you have a whole bunch of people standing in the pit. Let's see if we can do some emojis here. Very high production. So let's do like a worried dude. Let's do a happy dude who's shorted at the open. Let's do the big baller. The shades on. Let's do a sweating newbie. So all of these people, right? They're like, hey, do you want to take a long here? And they're like, not sure. Maybe we need to go lower. Do you want to take a short here? Well, for now, it's kind of succeeding, but we still need to smash through the lows. And here we are. So we get to the lows. Let's look at this on a very low time frame. So we get to the lows. And then all of these guys are still in the pit. They're gathering. They're like, do we want longs? Does anybody want to take my long? Oh, I'll take it. Yeah, man. So let's look at a microstructure, right? What is actually happening here? So looking at a 100 tick chart, do we have a low on crude oil here? Like you can't quite do this on RBOB at this time of day because it's so thin. But crude oil still has, you know, decent amount of volume. Where's the low here? There. Until that confidently goes, like if we have a massive move through the low, things change. But as long as like they kind of just touch it, even break it, reverse it, touch it, break it, reverse it, that's still not a confident break. That's a liquidity grab, right? Let's have a look at how crude oil. Yeah, look. So 328 contracts sitting on 72. So really, I would expect them to reach 72 evens and then to reverse, right? That would be the play here. So until that happens, we may not see a major move back up. But this is the low. This is the reference low. So now these guys are like, do you like shorts here? Nah, no. But I'll exit my short from earlier, and then you get a pop. So what happens? What is a short exit? So if you were short from up here, when we get down to some of these levels, what's the exit? It's the opposite order, right? So he turns into a buyer. That's why sometimes we say, oh, they take profit moves. What are they? It's people bailing out of their positions. So you can typically see that in the microstructure. So what do we need for committed, proper swing long? What do we need? Well, we need this high to go. Okay, at the very least, we need some more structure that will create new higher highs, right? If we go really deep into price action, there's a high. So if we break 72.20, that could be, you know, something to consider. Now there is a thing called, you know, sustained price action. So you can break something and then reverse. That's not sustained price action. So you need a higher high, and then you also need that to sustain above the previous reference point, right? That's the whole point of microstructures and supplies and demands on low time frames. So I could say this is a little supply. I could also say we've got another one up here. So these are your price points, and I can see another one in here. So if you train your eyes to see these, you can actually pretty nicely, you know, say, well, we kind of held the demand here, and there's probably an older one somewhere, but we held the low for now. So this dude exited his position maybe. This dude is sweating a little bit because he's long and not sure. And this guy's happy because he took profits. Like, you know, he was also short. I don't know, maybe he's still short. So yeah, so imagine the auction process and the concept of, are you going through a recent low? Is there a significant swing from there? So not just like a slowdown and we go flat forever. No, is there like a wavy thing? Is there an ebb and flow to it? If yes, then any sort of high and a low, it's going to be something you can use as a reference point for how the price action is doing, right? So in here, for example, I need this to go higher than 72.19 in order to call, this low held. We now have a potential for a failed auction. And what do we need for a swing? We need 72.42 to break. Without that, everything below it is just a higher low. So we're still in a downtrend. So that's kind of how I look at developments on super low time frames. I am aware of supplies and demands on those low time frames, and then I just look at where they're stopping, where they're grabbing liquidity, but still sustaining above the level, and you can see that. As long as you're not painting the picture with your emotions and you're just going, oh my God, I just lost money, because that makes you not see things clearly, right? You're freaking out over some lost money. It's like not a great thing. So you have to just unglue yourself from that and just go, what do we have right now? How are we seeing this right now? It doesn't matter what you did before. I always say be like Drew Barrymore from 50 First Dates, where she has this short-term memory issue after an accident, and she can't retain anything past one day. Like, a day goes by, a whole bunch of events happen, she goes to sleep, she wakes up, she doesn't remember anything. I want you to be like that with your trades, right? You do a trade, it shouldn't be the biggest loss or biggest win at all. If it is, just go, especially on the biggest winners, just go, oh, that was nice. Don't get elated over it. It's just one trade. It's just one trade. It means nothing, right? Because you can F it up the next one and then you ruin all of that. So always be on that kind of defensive stance rather than, I am the wizard. Always be, I'm not sure. You will notice that all of us who have been doing this for a very long time, we're generally pretty humble, because we know what market can do to you, right? And none of us are like, oh yeah, I'm the best trader ever. Because no one is. Everyone can be, misreading the market. You could not get the moves that you get. Is that a trader being a muppet? No, it's just we didn't get the moves. It's a quieter day. We don't have a crystal ball. We can look at volume and we can sort of ballpark it whether we have big releases or not. But, generally, you're not going to get wins every single day. It's just, it's part of the business. So the more you can sort of unglue yourself from any sort of monetary based values and just objectively look at what's happening in the market, the better off you will be. And in fact, I think that is the huge distinction between good traders and bad traders. Those of us who have survived for many years in the game, we just don't really care about results. Like, to me, this is more playing detective. I really don't care about any single trade outcome. Nothing. As long as the losses are, reasonably controlled, you shouldn't care. You shouldn't care. All right, so now they're trying to break further. This is the 72. It went. Okay. 72 is gone. And now let's see what they do. We're all gathering. Now we want to buy this. Do we want to buy this or do we want to use this as a springboard? This is value high now at crude oil. Now we could have value acceptance lower. That is possible. And we now have a drop-based drop on the 30-minute chart as well. Just watch RBOB teleport somewhere. Teleport. So let's see. We're inside value now from yesterday on crude oil. RBOB has not actually done the mean reversion yet, so that's still up in the air. Let's see what they do. And this could take time. It could take 15 minutes for them to decide whether they want to get out of value again or whether they want to rotate through it. But the next 15 minutes, 14 minutes is going to be the decisive factor of whether we have more longs or whether this is just another push off a cliff. Is there news? Let me just check financial juice for a second. Yeah, so stock futures and oil prices fell after China retaliated against additional U.S. tariffs, reigniting the trade war between the world's two largest economies. That is headline risk, my friends. Yeah, so be careful of headline risk, as always. So we might see some shorts here just purely because of that. But again, value high is a technical area where the players still might reverse it, and that might be it. One thing I'm seeing on the dome is that they keep creating these big orders to the downside, and that means they will get taken out. Sometimes you can use the big dome orders to find direction. Let's say you do want to go long, but then we saw the big 300 order on 72. Well, you know that they're at least going to go down to 72. So now 125 is a decent order, but sometimes they run away from that. Only when we get into sort of like 200 and 300 contracts, they're like, yeah, this is it. Right, some buying happening. Now, where is our new supply? So with the more relevant swing, I would say that that is here. So if that goes, I might try another RBOB trade. And remember, just a practice account. Because I'm having issues with my NYMEX products on live. Let's have a look at more questions. How do you decide which contract is the front run? Highest volume. So you go CME, GC. You see which of the two actually has the highest volume. Okay. All right. So let's try another long. The Topstep X, you don't have the possibility to pick and choose your own contracts, right? It's going to be rolled automatically. So I don't know how they roll it. They say that it's based on volume, but I'm not too sure about that because there were a couple of times when I tried trading RBOB and I didn't notice that they rolled early, and I looked at the volume and clearly the previous contract was still higher. So I was like, okay. So yeah, I don't know what, I'm just a trader there, so I'm not privy to the support and the code that they use to make decisions. All right, so see here, we got to this visible range POC. We're having problems. So until that goes, still no longs. Once it goes, pulls back, then we have a long because it will sustain above the previous lower high. And then we have a higher high, right? For now, it's just lower lows, lower lows, lower lows, lower highs, lower highs, lower highs. Until that changes, if you're looking for longs, hands off, pause off the trigger, step away from the mouse. All right. Next question. Do you use CVD or open interest? Loosely. So that is more Hogue style. Now, I obviously consider Hogue my big mentor, and I learned a ton of stuff from him. But we're different people, right? We will have different ways to position ourselves, different ways of looking at the market. I've gone one step further, and I'm quite a bit more systematic than a lot of the traders that you will meet. I like data. I like to, make everything nice and cushy and, wrapped up in a little bow. And I like to make sure that I don't overload my brain either. So I do look at it on Bookmap, okay? I'll be honest, for open interests, I will just ask Hogue. I actually will not. Like, this is the great thing about being in a prop firm, right? You don't have to do it all yourself. You have specialist people who will give you different things that you can use in your own trading. So if I want, delta, for example, so if I want cumulative delta, I will look at Bookmap, but I will also say, Hogue, what do you reckon this delta thing is doing? Like, sometimes if there's a lot of delta, but I'm not seeing the price doing the same thing, I will ask Hogue whether he thinks there's a divergence, because I'm not sure, since that's not really a part of my core way of doing things. But when he says, oh yeah, they're trying to get everybody, like, let's say we have extremely positive delta on like 3,000, 4,000 on crude oil, but we're falling in price. That's a delta divergence. So I know I've seen that a few times on crude oil, and I'm always like, hey, okay, can you see what this crude oil thing is doing? And he's like, yeah, they're trying to get everybody short so that they could smack him long. And sure enough, I would find a setup that would match my own playbooks. And then at some point in the day, that comes true, and they kind of pop it. And then usually I get a message from Hogue, and he's like, there they are. So yeah, you don't have to be like a super specialist to do like everything. There are people who are, specialists in support resistance. There are people like myself who focus on supply, demand, average ranges, and profile. Those are my specialties. You have Hogue, who specializes in delta and open interest. He's very good at that, right? He tracks it every single day. So I don't use it in regard that I have it on my plan, but I will absolutely listen to Hogue, ask him questions, and reach out to him if I think that something else should be happening, right? Okay, so now I'm seeing some shorts that are actually stepping in. So let's do, this is like market generated information for you. So when the market changes and you are looking for longs, but nothing here is telling you to go long, you then want to try doing a short. Why? Because right now we have gone below. I'm going to use the 75 tick stop here again, primarily because of that spread, and it's just not good. So I don't want to keep getting like paper cuts because of the super tight ticks, super tight stops. Because if you're using a 35 tick stop, but you have a 9 tick spread, you have to add the spread onto your stop. So if I was going to use 45, I would still need to use like a 55 tick stop. But because I'm also talking, so I can't really give it my full attention. I'm just going to use a wider stop so we can kind of stay in a position a bit longer. And then see if we can get more shorts. Right now, still creating what? Lower highs. And maybe lower lows. Still no change in the micro structures. It's still the same. Still the same. Here's our reference swing high, and just keeps making lower highs and lower lows, right? So for now, everything on low time frames is telling me it's not time for longs yet. So we default to the second hypo, which was what? Value acceptance short, right? And we still have space on crude oil as much as you want. Less space on RBOB, but still we do have about 100 ticks until we hit its value low. So still a pretty decent trade. I don't know what this anchored VWAP is. It was probably a low of something from like half an age ago. Oh yeah, it was from when we first hit the speed bump. Yeah, that's probably not that relevant now. Let's remove that. See, sometimes you leave lines on the chart and say, what was this for? I do not know. Cannot remember. Okay. Now, remember, RBOB is still the stronger of the two, I think, so it may take a while until crude oil drags it down. So let's have a look at more questions. How to interpret huge limit orders during the London session because they are ultra visible. The same way that you would interpret them through the New York session. They are draws of liquidity on most products. I think maybe bonds might not be. Not a bond trader, so full disclaimer. I know about them, but tried trading them, not my jam. But you know, I do have a whole Series 3, so I do know about bonds and what they are used for, how they relate to other products and stuff. Would I trade them intraday? No, because I find them quite dull unless there's something going on with the monetary policies. And then they move, but you know, I want to trade something every day. And I want to learn, you know, how to trade products that have that liquidity on most days. Like, I hate trading illiquid products. It's like, ugh, kills me. I'm actually going to be learning how to trade hogs from Coach Hoop because we've been chatting a lot. Obviously, he used to trade crude oil. He trades a whole bunch of things. We have some crossovers with the stuff that we trade. And I've never really traded lean hogs or cattle. And why not learn, right? So we made a pact. I'm going to show him how to do RBOB, and he's going to show me how to do hogs. So there we go. It does remind me, like, the whole camaraderie that we have in the prop firms. It definitely brought back that, you know, oh, you have some colleagues around you, and they are competent traders, and you get to chat ideas and, you know, think about other products, and, you know, gives you sort of nudges like where liquidity is, you know, and what is moving. So, you know, to me, that's one thing that I was missing when the whole remote prop firm started happening. Yeah, but the large orders is the same thing. They can be draws of liquidity, especially if they're like within sort of like 10 ticks. Then definitely you can use those as sort of a directional indicator at some point. Obviously, don't just go, oh, I see 300 lot or 1,000 lot, I'm just going to long it. Don't do that. But if your playbook says, hey, I've got a level, it might reverse here, and I'm seeing a large order in the same direction higher up, like let's say you want to go long, I don't know where this order is on ES, I can have a look at it. Right, so it's actually down. Yeah, so now I would expect this to actually get smacked at some point. So if you're already in a trade, consider a short to and through, because they will smash through it, 60.25, okay? Because at some point that will get smashed through. When? I don't know. I see the same thing that you do. It could be in the next 5 minutes. It could be in the next 3 hours. No one knows. But if you're already in a trade and you're looking at that, maybe don't go long until this is gone and until you have a chance to give it time post smash of the big orders before you go in again, right? But it can be a directional indicator. So for now, ES, big order down, direction is down. So if you can find a scalp down to there, that will be the play. Cedric also says, is it an institutional exit or a filled position? I mean, it could be either one of those. We have no real way of knowing. Anyone can place a limit order on the dome. And those of us who are in live, I've shown this before on, I think I showed it on Platinum, where I can't show you that today because my orders are not going through. So every time I place an order, it gets killed in 3 seconds. But yeah, I showed it before where I went really far away from the market, and then I did a limit order massively away, and you can see it on the dome. It pops up, and I go, there you go, that's me. That's Dee doing a, one short Platinum higher up. So it could be an institution just by the size. This is not going to be your mate Dave down the road, is it? Trading 1,000 ES contracts. I mean, maybe it is. But yeah, that's a lot of cash. So it's probably an institution looking to exit some positions or something. And just by the fact that it stays there, it's not an algorithm, because algos move along with the price. At least I don't think it's an algo. Let me actually just watch it. But I think it's not tracking tick for tick, which implies it's actually an actual order. If you see the algo bros that we like to call them, they're usually active during the New York session. I don't even know how that's legal, man, because they have a chunk of orders that are all like 300, 400, 300, 400, and they sandwich in the real-time price up and down, and then they kind of move along with it. It's like so annoying. It's really annoying. Value high is reactive now in... We have a quiet session. This is how you get long shorts, long shorts, long shorts. So now it's time to breathe, right? We had a short, then they tried a long, kept going short. Now they're trying a long again. But it's messy. So we have drop, base drop. We have an unclean arrival into the value high. So this would be the time. You try 3 times. You can't get a good direction. And it's not even like, oh yeah, it's a bad setup. It's not a bad setup. We've gone nowhere, like for 2 hours. Look at this. So look at the price action. Is this directional? No, it's consolidation. And that's how you know you're in a consolidation. But you have to be aware of it as well. You're not like, oh, I tried a short, it didn't work. I tried a long, it went against me. Everything I do just goes against me, boo. And then, they get angry, they get frustrated. They're like, nothing works for me. And the victimhood mentality comes out, all of that. Psychology, self-limiting beliefs that we all have. But actually, when you are in a consolidating price action, unless you're sniping it from the highs and the lows, you're going to feel like every side is going against you. And that is the first step to go, hold up. Whoa. So I went short, went against me a little bit. Close it. Went long, also went against me. Went short again, also, it's a consolidation. So in my head, I've actually trained myself to go, yeah, okay, it's consolidating. So it doesn't, it's not, it's just another market-generated information, right? If you start freaking out and you go, oh, I'm going to get you now. No, you need to step back and then go, okay, if it's a range, where is the top of the range and where is the bottom of the range? Regroup, reset, regroup. So now, on crude oil, top of the range, 72.40 ballpark. So somewhere around here, so you can see it. Mark that. Where's the low? Well, we now have a higher high. So visible low is down here, right? Let's mark that as well. Do you now chase it knowing this is a consolidation? Or do you wait until the high comes in, where we also have VWAP now, and then you snipe it from 72.40 after it comes back down below VWAP? I know what I do when I notice the range. So that's the regrouping part that many people don't do when they have a couple of losses, or, they just keep going. They're like, another trade. Oh, I can catch it up to there. No, because now it's a 50-50 coin flip. We don't know that it's going to go back all the way up there, but when it is at VWAP and the top of the range, we can now have a pretty decent idea that they're going to sell off from there. So that's where you look for setups, right? Consolidations are pain to trade because they take a lot of patience. You have to wait for just the right trade location. If the touch and reverse happens too quickly, the trade location is gone. So now you're like, I missed that. So there are, emotional implications that you have to deal with as a trader. But consolidations are always a pain. They're never like, oh yeah, it's consolidation, let's trade it. Yeah, yay. I'm always like, oh, roll eyes. Because I like my momentum trades as well. I like my failed auctions. They just go. I like my value acceptances that also just go, but the reality is you're not going to get those all the time. And it's all of the other things that don't happen that you need to learn to control as a trader without getting annoyed. It's kind of like being in a traffic jam, you're sitting in your car, you can't go anywhere. Are you one of those people that gets road rage and gets really annoyed and starts flipping everybody off? It's like, what do you do? I never get annoyed. Or if there's a queue, like just the other day, went to a post office, standing in the queue, there's nothing you can do to push it along faster. It's a queue. People are there to drop off packages. There's a lot of people. It's London, And there was this older woman who kept doing this. Like literally for 30 minutes. And I was like, what a waste of energy, man. You're just like working yourself up for no reason whatsoever. Just roll with it. Just roll with it. You're in a queue or there's a traffic jam, there's lots of traffic, you can't do anything about it. Relax, listen to some music, take a look at the leaves and the trees around you, enjoy life. There's always beauty in the world around us. It's not, don't get so zoomed in any like one particular annoying thing that happens. Your life will be much more pleasant, Justina says, I know you're in practice, but do you find you need to build up an XFA before you trade it? Normally, yeah, absolutely. So we are not allowed to trade XFAs anymore. I know there was talk about us getting like a charity XFA that hasn't been put into place yet. But definitely, when you get a new XFA, you only are working with maximum 4.5 grand, right? For 150K. For something like a 50K account, it's only 2K. You can't trade it on a mini, like one trade on RBOB. Like I can't trade RBOB in a new XFA unless it's 150, right? So if I have 4.5K, I can maybe do like 1 or 2 trades, and I will do less trading. So no scalps. I will be doing 1 hour per day, limiting my screen time for a new XFA, and then just looking for the best time of day that I perform in a particular product, getting the star set up, and walking away. Now, once I'm in like for a week and, you've had 200 there, maybe 150, maybe one loss, and then a 400, and then typically I will have one day where I make over $1,000. Then you have a little bit of buffer, right? But it's still not like I will usually get to like the 5-day mark pretty quickly, but I would never take 50% payouts without having at least double the amount of buffer in there, right? So if you're on a 4.5K, 9 grand is the first point where I would take profit, where I would take a payout. If it's 2K, yeah, even that I've racked it up to 9K before taking anything out. If you want to take the money out, just note that your maximum loss limit will go back to 0, not to the trading drawdown. So you can imagine why people blow accounts. It's like they get to 1,000, and then they're like, I'm going to take 500. What have you got left? Because now your maximum drawdown is 0. You have 500. Your back's against the wall now. So it's like, bankroll management is pretty important. The VIP group that I'm running, I have the first live session today at 6:15 p.m. after I'm on with Paul, and then I'm going to jump over to Discord. And I'm going to talk about that because I think it's very important. So you need to use your best judgment and critical thinking for how you're going to manage the account. Many people manage their accounts by the DLL that they were given by the risk team. It's like they get into a live account and they're like, okay, there you go, 3 grand. And they're like, oh, I've got 10 grand in the account, but I'm still going to spend 30% of the account in a day. That's probably not the best choice, So you need to build up those buffers, definitely. And we've seen Rafa, he took so much payout that he basically paid himself out of the account in the end because it hit maximum loss limit. You don't want to do that. And I don't like the 50% payouts. I mean, I have done them, but I prefer 20 or 30%. If you really are like burning for money and you have some cash in your prop, just take like 20% out, especially if it's not a big buffer. If you've done really well, like let's say you smashed it, like you had a brilliant week, you like outperformed everything and everyone, and you're sitting with, like 20, 30K for a week. Take 50% out. Absolutely. But anything less, if you are just normal, 200 here, 300 there, 600, great day, 100, 200. Don't take 50% out. Leave some money in there to actually trade with. Otherwise, you blow it, and then you have to start the whole thing again. It's like, what a waste of time. Christian says, Deeyana, when I use practice, I'm winning most of the times. When I use a combine, I get demolished with losses. What do you think I could change to reverse the scenario? Imagine that your practice account is your combine. Don't change anything. Don't go larger in the practice. I actually hate when people do this. Like I had somebody in the VIP going, oh, I just blew the combine because I thought it was my practice account. It's like, what are you looking at? Where are your eyes? What is happening? How can you be wrong? Like, maybe if you don't notice like in one trade, but to go for a whole day without noticing it, when I'm on the wrong, it does happen, right? You have the wrong dome or wrong chart. I noticed it within like a minute at most. I don't spend the whole day clicking buttons and then it's like, oh shit, it's not the right account. Like, what are we doing here? Like, how much of a diluted focus do we have that we don't notice which account we're in? It tells you everywhere. Look, dome, 150K, practice, 150K, practice, 150K. Like, what are we doing here? It's like, come on. Now, what I would say is the reason why you do great in practice, I'm actually the opposite. I suck in practice mode. And on most combines as well, since we went live, and since that's the only thing that we can do, I've kind of not really gone back to combines. So I just kind of use them as clicking buttons and testing things out, and not like any strategies, but just kind of seeing whether things are working. So I don't even have a valid combine anymore. And every time I go into practice, I suck, right? And yet most days I'm up on my live. It's like, it's the most bizarre thing. So it's almost like my brain has gone backwards, where practice is like, oh, I don't care. But at the same time, the decisions that I do make in live work out. But then the decisions that I'm making in practice are not that well thought out. So I lose. It's weird. And the same thing has been happening since, like I said, we can only trade live. So, every time I go into a combine, I enter a trade and I forget that I'm in a trade. That's happened to me before, right? But if you're only focused on practice or combine, then maybe you're doing something in practice where you're, because I don't trade out of fear, right? When I'm trading in live, I trade via a systematic process. So, for example, I know that once we get up to VWAP up here, that will be a trade that I will take on my live. All of the bullshit trades that I've done here, I wouldn't have taken in my live, right? I wait and I wait and I wait. And then once I have a full understanding of what I want to do, that's when I will start the trading, right? Until then, it's just observation mode for me. And, I get criticized a lot about that. Oh, so Dee just sits there and doesn't do anything. Oh, when she trades, she loses. Yeah, it's because I'm mostly in practice accounts. But when I am trading live, like you've seen me do the RBOB trade, I think was it last week? I was pretty confident in my star setup. It was during lunchbox trading. And I was like, yeah, this is my setup. And I held it for 164 ticks live on air, right? So it was not, oh, I'm just going to click buttons here, whatever. I was like, this is the time. This is it. I'm looking at it. And once I saw my signal, I went in, held it. That was it. Somehow with the practice account, Like I can't be bothered, right? Because I know it doesn't matter. So I just like start doing stupid things. However, most people have the opposite problem. They don't care, so they will put setups on. They're perfectly valid with their system, but they're afraid to take it in their real accounts where they have some skin in the game. So perhaps, like, I would need to know more about why this happens. Do you change position sizes? Do you trade with minis? And do you trade with multiple minis? Because that will scare the shit out of you in combines and XFAs. Okay? Trading real things that matter, that have some skin in the game there, that is bloody scary, right? It's scary. So, to reverse that, sides down in both. Don't go YOLOing in the practice account because it's a practice account. Use the practice account as the realist account, as if it's like your XFA. Like you're in an XFA, what would you do? And see whether that changes how you think and how you perform. The practice accounts of that sort should be used as preparation for the real thing. Think of it as dress rehearsal. Imagine that you're an Olympic medalist and you are now preparing for the next competition. It's the heats, you're getting a qualifier for next year. Are you just going to sign up for the qualifier, run out there and go do your thing? No, you're going to do a lot of practice in the safe environment where nobody's like on the clock and no one's scoring you. There's no other people to compete with. You're just competing with yourself. That is what the practice account should be. What I see a lot of people doing is what I do with it, right? It's like I have the accounts that matter and then I just click buttons. It's like, oh yeah, this will be interesting. Click, click, click. It's like, we don't want that, right? And some people that works for them because they are more loose with their situational awareness and they're like, oh, let's go long here. Let's go short now. And then in the real accounts, you lock up. You're like, oh, that's scary. Oh no. So maybe try to forget that it's a practice account and trade it as if you will trade the real accounts, right? So I don't know whether that will help you. If it doesn't, then obviously you need to tell me what you do exactly in those practice accounts that makes it so different, such a different experience. But it will be mental. It will be fear of some sort. It will be the inability maybe to accept a loss. And yet in the practice account, you maybe don't care as much or you don't care at all. So you keep going. The loss doesn't mean anything. But when it happens in a combine, suddenly it's your self-worth on the line, man. So your ego comes out to play. So maybe that's it. Many people have a problem with a losing day. They're like, oh, I had a losing day. I suck as a person. No, you don't. It's one losing day. It does not matter. You do not suck as a person just by the fact that you want to do this. You're already an extraordinary person because normal people don't get into risk-based jobs. Normal people go for 9 to 5 and they stay in them for, 50 years and then they go into retirement and that's it. Those of us who are not nuts, who are nutters, we look for jobs where there's no real security, but there's no real ceiling cap either. I've always gone for jobs like that. So I've been a musician, I've been an IT recruiter, and I'm a trader, right? So it's like all jobs where, yeah, you sort of have some kind of a salary at some point, but generally it's all performance-based, right? It's commission-based, performance-based, or you do a gig, then you don't know when you're going to get the next gig. I'm cool with that. I'm totally cool with uncertainty. But many people are not. So just by the fact, if you have a bad day, just remember, just by the fact that you're trying to learn trading and to be serious about this, and you are even recognizing that you're trading differently in practice and in combines, that's step one. It's kind of like 12 steps to recovery, right? Recognize that there is a problem. But at the same time, you're a very special person by even deciding to step into this world. It's scary stuff. Putting risk on the line, like numbers, just growing. I was chatting to Brett yesterday about the whole NYMEX thing, and then we were kind of, just chatting in general. And he said that he bought himself, a pair of shades or something to remind himself that that actually spending a certain amount of money is quite a lot. And I was like, yeah, I did the same, except I bought a sofa. That reminded me that $3,000 to spend in a day is indeed a lot of money. So yeah, we kind of get lost in the numbers and all that. And sometimes applying the real world to it, and actually going out to buy something that is equivalent to the number that you're losing, it sort of makes you think twice. Like, would you actually spend $1.50, $2,000, $3,000 in one day away from the trading screen? Would you? No? How much would you spend? 100, 200, 500? Everybody will be different, right? So why don't you set that as your personal daily loss limit? Because you can do that in the practice accounts. We can't do that on our lives. But yeah, see how that goes. Put it in the real world situation and then go, why am I losing this much money when in my normal life I would never? See if that helps. So, I've given you some of the suggestions. So it's not, advice or anything, but a suggestion that might help. Money VD says, what's the most important tools or indicators to help a newbie to be profitable? Time. There's no indicators. Yes, indicators are helpful, but time in front of a screen, journaling, basically using the Kolb experiential learning cycle. It means you do a trade, review, improve, come back to trading, and keep doing that. Okay? There is no tool, singular tool, that is going to make you profitable. Time will. This is experiential learning, right? This is why we do this. There is no substitute for learning how your instrument lives and breathes, how it behaves through different events, how it behaves through NFP. We have NFP on Friday. How does it react to the inventory report on crude oil? Because some products don't give a monkeys about the inventories report, but crude oil, a little bit whippy, wicky. Sometimes you end up in a trend, most times you don't, which is why I don't like Wednesdays. But yeah, it's time. Yeah. So try things out. Every trader that I've met as a colleague in this line of work, we're all a mishmash of things that we've tried out, either made it work or didn't make it work, discarded things that didn't work, kept things that did, and created an approach. We're all different. Some systems are more malleable than others. Like market profile, for example, for me was a big eye-opener. But do I stick to never front-running a trade idea and just sticking to the core rules? No, I evolved the profile to fit my needs, right? So sometimes even if I have a failed auction, I might do a few scalps in a failed auction rather than just running one trade and then watching it go back up and then go back down. It gets me. I want to take some money, right? I want to take some profits, especially if it's like a very big initial balance or something, and I doubt that the full rotation will happen. I will, for example, if we get this move, into VWAP on either crude oil or RBOB, I would absolutely snipe the short from VWAP. I wouldn't be looking for a full rotation, right? Because, it might happen. It might happen. We might get up all the way to the originating supply, which is located at 209.11 on RBOB. And probably we have a corresponding supply on crude oil as well. Yeah, which is located 72.50 ballpark, right? So those are two kind of orientation points. But, would I know how to recognize those without, at least a couple of years of knowing what those setups look like? I first have a framework and then working within that framework and a trade idea. Then you gather experience. Then you journal through it. And then you see what you suck at and what you're good at. And then you minimize the suckiness and you try and increase your strengths, right? So one of my big strengths, it bizarrely happens to be one of my big weaknesses as well. So I can find trades that will go for 300 ticks, right? I know my points where the market turns around, and it's kind of like a point of no return. I'm very good at fishing for those areas. But my huge problem is nearly always looking for the massive move. So when I'm off my game, I will be in a very good trade, but I won't take 60 ticks. I won't take 70 ticks just because I'm like, nah, it's going to go. However, this is intraday. So I'm still kind of battling with that, but I've gotten better over the years to just go, hey, it's 40 ticks, just bloody take it, and then I'm getting better at recognizing opportunities to get back in. That was a huge problem of mine when I was just a swing trader, because swing traders, you just have one setup, you have a reversal. That's it. But as an intraday trader, you have to have a whole host of instruments that will actually serve you well for a particular day. And I have two big mental triggers. So not taking profits on time, and my second one is when nothing is moving. That's my big one. Like I would just be like, come on. That's why I don't trade very quiet instruments, because it just does my head in. I can't do it. Fixed income, I would just go jump off a bridge at some point, if that it would be that bad. I would be like, oh my god, I've spent like 10 days in this, and it's only moved 5 ticks. No. Get me out. Save me. Send help. But yeah, I like my products to be medium volatile. I don't like NASDAQ because it's bad, like bonkers. It's like batshit crazy. But I do like crude oil above 35 OVX. That's like really nice sort of middle ground. I like DAX when its volatility index is over 17, and we are in that situation. Oh, DAX has made a movement. Okay. Might be doing some DAX trades after this session. But yeah, so any indicator that you run into, there is no holy grail. There's no one indicator that's going to magically make you profitable. It's like learning to play a musical instrument. If somebody gives you a violin tomorrow and you've never played violin, you're not going to suddenly become a virtuoso in 2 months, okay? It ain't happening. I'm sorry. It just ain't happening. You could get decent at it after about 2 years, but are you going to be good enough to do solo concerts and be the first violin of the New York Philharmonic? Probably not. It's going to take years and years to get there. Just because we click buttons doesn't mean that the skill of what needs to be done and all the things that you need to collate and aggregate and spew out in the moment's notice, it takes time. So adjust your expectation, my friend. That's what I'm going to say here. Look at it as a long game. If you want trading to truly change your life, it's not going to happen overnight. So this is not some kind of a get-rich-quick scheme where now Dee says 3 things and then you go off and suddenly you're smashing it. There'll be a lot of mistakes. Whoever you talk to who has been in this game for a long time, we've had ups, we've had downs, we've had mostly up years, but we've also had down years. And when it's working, it's beautiful. When it's not working, it's terrifying. So, welcome to the show. That's the name of the game. So it's going to be a wild ride for sure. Is it worth it once you get to a certain level of consistency? Like these days, even if I have a bad day, it's never a terrible day. It's not like, disastrous. It's just like, okay. Did not need to. Like, for example, the other day I was up like 680 and then did some stupid trades on ES towards the end of the day. And then I was back down to 0. So I was like, okay. Thank you. Not liking equities again. And then I just stopped. But, it wasn't a losing day. However, it was a $700 swing, which I wasn't very happy about. But I didn't beat myself up over it. I was like, gave it back. Let's try not to do that tomorrow, right? And then, for the next kind of 2-3 days, it was like 400, 500, 200, 400. It's like, it's just how it is. But it's not, oh my God, what have I done? And then you can't sleep, it bothers you. Never allow the loss on the day to get to a point where it prevents you from sleeping. That's not the name of the game here. And if you're doing that, you're trading with too much size, or you're not using your personal daily loss limit. There will be a reason for why why you're bothered by your losses. If you're bothered by your losses, you're trading too much, or you're trading too much size. Size down, slow down. Should we make that into a mantra? Size down, slow down. Size down, slow down. Size down, slow down. You can write it down 50 times before bed tonight. Size down, slow down. Dee said size down, slow down, like Bart Simpson, right? Negative reinforcement. Let's rattle off through the final two questions. Cedric says, at what XFA balance level did you start to trade with mini? Head at 20K, start with 3 to 12 micro. Okay, once you get over 10 micros, is going to minis, because I don't... Or you can use a combination. 12 micros, 1 mini, and 2 micros is the same. But I don't know, maybe it's if you're a scalper, that might not work. So yeah. It depends, right? So if I'm trading now, another thing, because I had the live account, for over a year, and I still do. So every time I had some balance in my XFA, that got transferred to live. So I could never really rack it up for more than 10K. Because I would always take like about a month to get to 10K in a new XFA, and then it would just get transferred. So I don't even have micros on some of my products. So RBOB doesn't have micros. Platinum doesn't have micros. But yeah, I would probably wait. What did you say? You had 20K. On 20K, yeah, you can start on a mini, but it kind of depends, Cedric, how many trades you do in a day, okay? If you're doing like 10, 20 trades in a day, that's a lot of trading. So I would still stick to maybe 5 micros or 3 micros there, even if you have a balance of 20K. Because if you get it wrong and you don't have a personal daily loss limit, that can go wrong very quickly, and you're going to find yourself out of the 20K, like literally in days. Like if you're hitting the 3K loss limit and you only have 20K in there, that goes in like 7 days, right? So you're not even going to last a week. Always trade smaller than you can. That's what I would say. Instead of going, when can I trade with size? I would say, how long can I last in this account? Change your question. Might get a better result. But yeah, the only time I go above 1 mini is if I'm over 40K in the account. So I have 40K in there. Don't play, and even if I'm planning to do scalps, like let's say we have a neutral day type. So we have a range, extensions on both sides. That's a scalping day for me. I would drop back down to 1. So it will be a case-by-case thing, but, ballpark, if I'm going to go, when do you size up? Not before you have 40K in there. And even then, be careful, right? Tocino says, thank you for the answer. Appreciate that you set up real risk expectations and size when you show your Topstep trades. I wasn't able to get into your VIP. Are there recordings for your Discord sessions? Yes, I will try, but I don't think they will be available for non-VIPs. We're trying to keep it exclusive to the 50 people that I have at the moment. I do have a website if you want to know more about my method specifically. In the VIP coaching, I will do a little bit of that, but the VIP coaching is more with the logistics of passing combines, keeping your XFAs, not blowing out in 3.5 seconds, not trading like a lunatic, sorting out your psychology, sorting out maybe certain tech issues, technical issues. That you may have, like for example getting involved in breakouts constantly, getting smacked on the face, probably a problem with the strategy rather than with psychology, right? Because if you are looking for momentum trades, great, but most momentums fail, okay, especially on, like, the only way the momentum works is if you have 1 million ticks like NASDAQ, right? So you have 1,000 ticks of a breakout, as 1,000 ticks of a daily range in a day. When you have a breakout on NASDAQ, it will offer you about 20, 30 ticks, at least, sometimes 50, right? Before it reclaims the level. But if you look at something that only moves like 150 ticks in a day, like 10 times less than NASDAQ, how much of a breakout move are you going to get? 5 ticks? Maybe 7 or 10? Like, let's have a look at the breakout of the low on crude oil here. So this was a break, right? Break of the low. Measuring tool. I need a measuring tool. Where is it? I always forget. Forecasting and measurement. There we go. I hope this gives me ticks. Let's see. Yeah. 22, but it only popped and then reversed, right? So if you weren't quick enough to catch the pop, you would be looking at 10 ticks profit at most, but usually a loss, because by then it will be back in range. And this is why momentum breaks, you have to do them on very specific products. You can't do them, like you can do them on RBOB, because RBOB, when it breaks, it breaks. I just don't like doing that because I know it's going to come back into the range, and I would rather snipe it back the other way, contrarian D. But yeah, with crude oil, it's just not a liquid enough product to give you 50, 70, 100 ticks upon a breakout. If you think it's a significant break and a trend change, that's different. We can catch it in a pullback and snipe it for 70 ticks, without a problem. But for the most part, the way I see people doing breakouts is going, oh, this is a high, so I'm going to place a buy stop order at 73.40. Like, first of all, buy stop, you're not guaranteed any sort of a price. So if it slips you, it's going to fill you at 73.60 sometimes, and then the breakout turns into a whole bunch of crying, right? Or smashed laptops if you're not into crying. So yeah, it's it's one of those things where we will tackle common issues, but I'm not, I wouldn't want the VIP Discord sessions to be just out there for everyone, because I'm going to be talking about certain things that are proprietary to my methodology. And I know people are like, of course. Yeah, it's my bloody intellectual property. Of course I'm going to sell it. We write algorithms based on those strategies. And I'm for sure not going to be handing it out for everybody because they're valuable, right? I don't sell algorithms because they are very expensive and they are not generally affordable for the normal person. But, I do sell the strategies that I use to get to the algorithm ideas, right? I'm going to be talking about parts of that. I don't want that floating out on the internet for nothing, right? Now, the VIPs are special. You guys want a raffle? I'm with Topstep now, and I have committed to raise your skill levels. And that's what we're going to be doing. But it's not going to be teaching the Marcus Dawkins method in the VIP. No. If you're expecting that, I'm going to talk about strategies. I'm going to talk about profile. But I'm not going to be giving you all of my methodology because A, 3 months is not long enough. And B, everybody already has their own style. I'm not here to change your style drastically. I'm here to fish for your weaknesses and see how you can get through the hump of a combine and keeping your XFA so that you can start getting some money out of this. That's the point of the VIP. It is not necessarily to learn the ins and outs of how D trades. It's how you trade, not how I trade. Final question. Is it possible to calculate the risk in dollars before you... Well, yeah. You go into... If I can ever find my mouse pointer... into risk settings. So go into the cog, go into the risk settings, risk in dollars. Let's do it because it's a practice account, so it doesn't really matter. Let's do 350 and then 700, standard 2-to-1, and then say automatically apply risk profit brackets to new positions. Now, obviously, you need, I'm actually shocked that some people in the VIP don't know how much they're risking per trade in percentage of the account balance. That really genuinely shocked me. But yeah, if you are, for example, looking for dollar-based amounts, this is perfect. And they only have the dollar-based amount. I would like them to have it in ticks. So click on save, and now if I go sell, it's going to automatically place the 350 on my actual order. So you can see it, right? So stop, profit. Automatically, all I did is sell one market, and it automatically placed the bracket. So yeah, it is possible, but they don't have it in ticks yet. It's just literally in dollar amounts. If you want it in ticks like the ATM on Ninja, they don't have that yet. I would like to see it on the Dome at some point, but they don't have that yet. And this feature of setting your risk automatically in dollar amounts, that's available even on live. Now, we don't have a lot of stuff on the live that's available in the sim, but for most of you that shouldn't matter anyway. So yeah, so that's how you calculate the risk before you enter a trade. Now, if you are asking me about actually calculating it, like what would this be? Like how much is, 50 ticks? How much is 10 ticks in RBOB, for example? Well, you need to know the tick value of whatever you're trading. Again, coming down to the bloody basics of being a trader. What is the tick size of the product you're trading? Do you know? If not, go and see. Go and see. RBOB is 420, which Eddie laughs about. If you've been around TopstepTV, you know what I'm saying. So yeah, because the whole contract is 42,000 gallons, I think. Is it gallons? Yeah. So that's why 420, because one tick is 420 to reflect the size of the underlying contract. It's not because somebody's smoking weed and thought it would be funny to have a tick size of 420. It's literally because of the contract value, right? It's like 42,000. But if you then want to use now you have to understand the volatility of the product that you're trading as well, because 10 ticks on RBOB is not the same as 10 ticks on crude oil, okay? In fact, 10 ticks on RBOB is going to whack you out immediately because of the spread. It's actually got, like today, it's like $9 a spread. So if you place a stop of 10 ticks, what's going to happen? You're going to cover the spread and they're going to take you out of the market, right? So it cannot be 10 ticks because your spread is 10 ticks. Like it's just like basics, right? But if you, let's say you want to do 40 ticks or 50 ticks of stop, well, obviously you would multiply, and then this would be your risk per trade on a 50 tick stop in RBOB. Now, different products have different tick sizes. Like, for example, NASDAQ typically requires slightly bigger stops, and if you do 20 points, there's 4 ticks per full handle. That would be 80 ticks, right? How much is tick value? It's 5. So that would cost you 400. I don't know whether you're following me here. Am I going too quickly for people? Hope not. But basically just know your tick size, know the volatility of the product, and then just calculate your stop. But yeah, you can set the risk to also trigger automatically once you know this. So whatever you want to use, let's say you want to use 350. That's kind of like my ballpark number that I like to risk per trade. Then set it. Set it in the risk settings. And it will be done for you automatically. You don't have to think about it. Okay? All right, guys, I'm going to finish it up here. Check out the Dalton clip and Brett Steenbarger as well, because they were both here last week with us hanging. Those are now available for clips. Dr. Brett Steenbarger is a very well-known psychiatrist, who works with hedge fund traders, and he has some amazing tips for how to manage yourself, how to try and control your emotions. Didn't mean to leave this on. This was just a nonsense trade. It's a practice account, doesn't matter. And then Dalton was here with us too. He was absolutely riveting at, I think he said he was 85. So eloquent, like he came up with a bit of mouth quiver and stuff, but then he started talking and it was like, focus, this is what we've got, blah 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 blah. This is like it was amazing, right? And I used to love doing his webinars because of that. He would just explain to you exactly what's going on in real time. So he's a legend of the legend of the trading world. We'll forever be thankful for Dalton popularizing profile. And this is the clip, okay? Now, obviously, I'm a VIP coach now, so we have over 100,000 people in there. Out of that, we have some very lucky members to get into the VIP program. And if you haven't checked out our Discord, I believe that is it. Is that it? No. So that is not it. Okay, let's do it again. This is it. Discord Topstep. Okay. There we go. Over 100,000 people now. So it's a bit mad. It's a bit crazy, but still, it's a great place to find our coaches. All of us are in there now, and to see how you can improve your trading further. I'm gonna skip the trader 5,000 club because they don't send it out to the European people. So I feel like it's a little bit pointless me posting that. It's like, oh, Dee, how can we get our 5K hat and pin? Oh, you can't. So I just skip that and finish it up with a casting call. If you want to come and trade with us during the main broadcast on lunchbox tradings or Back to the Futures or any of those rotating segments, please fill out this form. You will be required to make a video, and then it doesn't matter if you're at the beginning of your journey or if you're already a seasoned pro. Come and hang. Come, banter, do a bit of trading. We're not that scary, we promise. We're very nice, okay? So check all of that out. Thank you for hanging with me. I'm going to be here with Paul H. later on during the main broadcast. That is kicking off at, I think it's 5:15 my time, I believe. Yeah, so that's 11:15 Central and 5:15 p.m. my time. So check it out. See you later. This has been the London session on TopstepTV. Take care.